So today I'm going to be talking about getting mortgage ready. And what I mean by that is the preparation that you need when you are getting mortgage ready. Now, when you're going to apply for a mortgage, so this is more for first time buyers who've never done it before, there's certain documents that the mortgage advisor will initially want, and then the lender, once they've decided, will also want. But in this time period that you've got for getting mortgage ready, so if you're a first time buyer looking for a property, or you've already got that property and you're waiting for other reasons, this is what you need to do to prepare. Now, I've been having quite a few interesting conversations recently to potential clients who are getting mortgage ready, and there are things that they never thought of or didn't actually know. And what I'm here to do today is tell you at least 10 things that you need to be aware of when you're getting mortgage ready. Because at the end of the day, the time you spend now getting mortgage ready will secure your chances or increase your chances dramatically. I mean, dramatically, of getting a mortgage. So let's get started. The first thing is your documents. You need to know what documents they're going to be looking at, and that way you can make sure they're in the best possible place they could be. What I mean by that is they will ask for 3 months bank statements. Now, at the end of the day, everybody says 3 months bank statements, 3 months bank statements. But what I'm here to tell you is if the lender has any sniff that there is anything wrong, they could go back as far as 12 months. So don't give them any cause for concern. Have the best 3 months bank statements possible so they wouldn't even think of asking for more. And what I mean by that are, first, and people don't think about this, is the descriptions you are putting on your transactions. Now, if it says this is a gift I give to this person, or this is something I give to that person, they're going to think, well, how many times do you gift that? They're going to start counting them up. You don't need to put in the finite amount of detail. The more information you put in when you're doing direct debits or anything like that, the more questions they're going to ask. I'll tell you that for nothing. The next thing to think is, if you do have standing orders for your kids or anything like that, do you really need them? Can you just give them money? Because every standing order you do, it becomes a committed expense and it can affect your affordability. That's something else to be aware of. The next thing I want to talk about is your overdraft. Now, your overdraft is meant to be for emergencies. I mean, I myself in the past have lived in my overdraft. I won't even lie. No one is perfect. But what you need to do now is get out of your overdraft and be out of it for at least 3 months, because lenders will see it as you cannot manage your credit. That is how they will see it. They'll look at you and they'll be like, can she manage her credit? Can he manage his credit? Probably not, because he's in his overdraft. Even worse, I'm afraid, is people that are overdrawn in their current accounts and they don't have an overdraft facility. That is a big no-no. The next thing, moving on, still about bank statements, is make sure that your bank statements are in the right naming convention. So if, for example, your account is Miss B Smith, make sure B probably isn't a good example because B could be in someone's name as well rather than initial. But what I'm trying to say is, if your name is Belinda, put Belinda. Don't put just B. So you can update your bank statements now. So when they go to look, make sure that the addresses are right. There's a lot of first time buyers out there that still live with their parents, for example. So the fact that that address, if they're renting somewhere, but they've still got their bills in their old address or something like that, or you've moved or whatever, make sure it's consistent. This also helps with your credit report, which I will come back to and talk about. But at the end of the day, When you are applying for a mortgage, you need to be mortgage ready. You need to cover everything that you could possibly cover. So, what you need to be aware of, have clean bank statements. And I will explain what I mean by that. You have to have a good credit profile, and I'll explain what I mean by that. You need to have really good credit. You need to have the right pay slips, the right documents. So let's go through it. So if you are an employed person, if you're employed, they will ask for 3 months bank statements, and they will ask for pay slips. If you've got a bonus or your salary fluctuates for any reason, like you're on a fixed term contract or you're a 0 hours contract or any of those reasons, they'll probably ask for your P60. And a P60, if you don't know, is what you get from the employer to say how much money you've earned in that 1 year. So by putting that, you will find they will be able to know what your annual salary is, basically. If you're one of these people that earns commission, so for example, you've got a basic and then on top you earn commission, they can include that for affordability, but they will need to know how much commission it is. And if it fluctuates throughout the month, throughout the year, each month, if it's seasonal, for example, or there are any variations, if you get the same commission every month, then they might go for 3 months bank statements and not ask for anything else. But if it does fluctuate seasonally and you want to have the average, then you need to provide maybe more banks pay slips, and also your P60, which will show the annual. And also they'll look at the bank statement to check that that money has hit the bank account. So that's one thing. Also, employees, if you're going a certain length of term, they'll want to know that you're paying into your pension. And things like that. So pensions, it's a bit of a grey area, because if you pay too much into your pension, then it reduces your net salary, which decreases your affordability for mortgages. But then if you want to extend your term past your retirement, you need to show that you put a significant amount of pension in. So it's always good. This is why Get Mortgage Ready is the perfect time to see a mortgage advisor. I would recommend you see a mortgage advisor like myself or someone else that you know, 6 months before you're planning to buy anywhere, 3 months at a minimum, so you can start putting in the preparation work. They can tell you what's good, what's bad, and what's different. Now, when you're looking at self-employed, they always say 2 years of accounts. Now, if it's not a limited company, then so when you're a self-employed, you can have 2 types. You can have a sole trader, or you can have a limited company. Now, if you're a limited company, yes, you can do your 2 years of accounts. But if you're not a limited company and you're just a sole trader and you just do your self-assessment, which is your SA 302s, then you won't have that. So what you would provide is your tax calcs and your tax overviews. And tax calcs, I mean tax calculations, tax overviews are combined with that. You can go on to HMRC and download them. What the bank is looking to see, and I think this is why it makes it a bit clearer for people. By knowing what the bank is hoping to see, will explain to you why you need things to be presented or to look a certain way. I'm not saying forge things, I'm just saying clean things up. And to be honest, these are great money habits to have for the rest of your life anyway. The way you prepare for your mortgage is the way you should prepare for life, basically. So what I'm talking about here is when you are looking at your bank statements, make sure that they are clean, which is just what I've said. And when you are looking at your SA 302s, the tax calcs, tax overviews, they want to know that you have paid your tax bills and you're up to date with your tax. HMRC has put the onus on the lenders to confirm that people are paying their taxes. It's the same when you're doing a buy-to-let and rental income, but that's a whole nother video. Now, we've talked about employed, we've talked about self-employed. The next thing I wanted to talk about is benefit income. Now, everybody who gets benefit income should get an award letter or some kind of statement. You need to provide those. Now, all of these documents that I've talked about are all independent of the bank statements. The bank statements do not replace them. They're on top of, because what they want to see, lenders, is a third party example, be it a payslip, be it a SA 302, be it an award letter, as the third party independent evidence. And then what they want to back it up with is the bank statement to show that that money has come into the account. Now, when they're looking at your bank statements, they're looking for two things. One, to see the income coming in independently. So obviously, if the income coming in is under your name, then it's not independent. It needs to come from the original source. They need to see that. So if you've got a bank account where you're transferring money into, they'll want to see the bank account behind that bank account, because they want to see an independent source of the money coming in. Yeah. And that's all to do with money laundering. The next thing that they want to see out of your bank statements is your expenses. So your committed expenses. So it's great to give, and I always ask all my mortgage clients to give me a copy of their credit report so I can actually have a look at everything. But obviously this feeds through into the bank statement. So when you're looking at your credit report and it's got a credit card or loan or whatever, you pay those off monthly, right? So you should be able to see them on your bank statement. Now, I know a lot of people have two bank accounts, one for income, one for expenses. You will need to provide 3 months of both, just so you're clear. If you're saving up for a deposit, or you've obviously got the discount letter and then you're adding to it with a deposit, then you also need to provide that bank statement. And sometimes they'll ask for 12 months to see the savings building up rather than just random money coming in. If you are receiving a gift, then they'll ask you to do a gift letter. Sometimes they ask to see the source of that money as well. So just so you're aware. So bank statements. Now, they will want to know that your full name is on the bank statement. They will want to know that the addresses match up, all of that information. So when you're asked for a bank statement, you can download transaction lists. That's great, but it will not have the header. When I mean the header, that's the name, address, account number, and everything. They want to know that so they know it's linked to you. A sort code and account number means nothing to them. It could be anybody's account. You know, you could just find a family member who's got a great cash balance and just send us that bank statement. It won't be accepted. You need to have yours, and it needs to be identified as you. The next thing when you're looking at bank statements is, as I mentioned, overdrafts. You can't live in your overdraft. I explained it to a client today. What that means is you can't be in your overdraft for any length of time. In fact, you need to pay off your overdraft and move out of it. And you definitely can't be overdrawn, i.e. in a current account, in the negative, but not even have an arranged overdraft. That's a definite no-no. So basically, you have to get out of your overdraft as quick as possible and stay out, because they want you to show that you can manage your money. So that's what they're asking for. When it comes to credit cards, again, they want to show that you can manage your credit, because if you can manage credit, then they're comfortable lending money to you. If you can't even manage a credit card, which the chances are the credit card balance or limit is going to be a lot less than a property, right? If you can't manage that, so that's on a small scale, how are you expected to do it on a bigger scale? So that is something that would be a concern to them. The next thing they want to do is they'll look at loans as well. So when you're looking at credit cards, make sure your credit utilization is low, about 30%. So for example, if it's £1,000 credit limit, 300 on the balance, you pay it off in full every month. You show you can do that. With your loans, make sure that you pay your loan on a regular basis. Car finance, if you can, stay away from it. If you want to buy a car, get a personal loan. That's a lot cheaper and a lot more respected by lenders. So you've sorted out all your income, you've sorted out all your expenses. Try and avoid late payments, missed payments, all that kind of stuff. It will really help your credit. Another tip is get on the electoral roll. Make sure you're registered where you live. That really does give you more help on your credit profile, and also helps your credit score if you're looking at that. So those are the things to look at when you're getting mortgage ready. If you want any more information, please put a comment, get mortgage ready, GMR, and I'll give you more information, because at the end of the day, it really is important to know about your credit and understand your credit. Because when you know your credit and you've got clean bank statements and you've got the right documents, it really does get you mortgage ready. And that's what everybody wants, right? To get mortgage ready so you can get that mortgage. As I said, put in the comments if anything, if you'd like to know any more about getting mortgage ready, and it will be really, really good. All right. Thanks for your time. Take care. Good night.